Hi everyone, I'm Sharmila with Keller Williams Realty here in Austin, Texas. Lots of things happening in the housing market and the stock market, but I'm not going to talk about the stock market. What a while it has been in the last few months. I wanted to give a quick update on a question that has been bothering many people lately. Is this a slowdown? Is it a housing bubble? Is the market going to crash? So I decided to explain a few key points to address these questions. To give you guys a context, since May of this year, the housing market has slowly but surely shifted to become a more normal market. The frenzy of the last several months, with multiple offers, homes selling for more than 20 to 25% of asking price, double-digit appreciation year after year, acute shortage of inventory, all that has finally ended. With this dramatic shift, there is a lot of uncertainty in the minds of the buyers and sellers. Where is this market heading? I'm going to share some interesting points and try to answer this in the next few minutes, so hang in there. This data is more at a national level. I will do a follow-up session for Austin in a few days. There are 4 indicators that determine the health of a housing market, and I will address each of them. The first one is employment. In the broad market, the unemployment today is at about 3.5%, which is considered pretty normal and healthy. As a comparison, in 2008, during the Great Recession, the unemployment had gone up to about 9 to 10%. So that tells you that we're doing well right now. The second one is lending standards. These have improved significantly since the collapse of the housing market in 2008. Where one of the main reasons for the crash was bad loans and lending standards. Pretty much anyone could get a loan, and that led to people buying homes that they couldn't afford. Third thing is foreclosures. These have also been at an all-time low. From 2.2% in the 2008 to 2009 timeframe, they've been on a decline consistently, and last year they were at about 0.11%. And buyers have built significant amount of equity in their homes. And the last point is inventory. Inventory has gone up 27% year over year, but it is still low compared to 2019 levels. In Austin, we are at over 3 months of inventory, which is still favorable for sellers. But at 5 to 6 months of inventory, we are in more neutral market. Buyers definitely now have more options than they did 3 to 4 months ago. So all of these things indicate that we're not heading towards a crash, but a slowdown. In fact, the average appreciation is expected to be at 11% this year and a little under 3% for 2023. So the housing market will continue to appreciate, but at a much slower pace. You're not losing value. And this is important to note for buyers who are sitting on the fence. This is a time to buy. And for sellers, if you're ready to sell, do it now. Look at the equity that you've built over the years. Greed is a bad thing. I hope this helps. Feel free to call me with any questions you may have. I'm your local realtor and always happy to help.